Hey, what is up guys? My name is Michael Segovia and today I am going to talk about how to start Forex trading in the year 2022. Now this video is actually a bit late. It's probably going to come out mid-February type-ish, but we're still early in the year and it is an excellent time to start learning how to trade. So I'm going to break down three simple step process. It's more of a general overview of how to get started trading this year. But before I start talking about that, I wanted to mention a specific quote. I don't remember who I heard it from. It was probably somebody from the Phantom community, but that person said that trading is the hardest easy money you will ever make. Why? Because trading is not easy. Wait, I think I said that wrong. Trading is hard, it's not easy. But when you learn to trade and you do it well, then making money from trading becomes easy. Literally, it comes down to the click of a mouse, and that's why it becomes easy money, but that's more down the line. So the first phase, or step number one, whatever you want to call it, to getting started in trading Forex in 2022 is to start with the right mindset, to first of all have a vision. So the first question you have to ask yourself is, why do you want to start trading in the first place? What is your why? It all comes down to your why. It's probably the most important things that has drove me to continue trading even failure after failure, because when you have a clear why, it just keeps pushing you forward, man. So if your why, for example, is I want to get rich quick, now that why is going to dissipate very fast because you're going to get unmotivated by the losses you start acquiring over time, if that is your why, because that why is based on an outcome. However, if you have a specific why that's more focused on identity, on lifestyle. For example, some people want to learn how to trade successfully so they can retire their parents. That why is a very powerful why. And it's not more so focused on the money, but more on the outcome of what it can do for your family, to support your family. Other people just want to have the laptop lifestyle, and that's completely fine. For me, personally, trading is just another source of income. Now, I'm not consistently profitable yet. I'm almost there. However, I just see it as another source of income. The only downside, personally, for me in trading is that you don't really add value to other people like you would with a business. But I do see it as a way as earning more money, whether that be full-time or on the side, and using that money to help other people by creating more businesses and such. So more on having the right mindset. You need to treat trading as a skill, and like any skill, it can be developed. Literally, it is a skill. There is just no other way to say it. It is a skill. It's a skill because the more you practice, the more you become better at it. The more you become better at recognizing your patterns, your trade setups. All of that starts to become very, very clear. But that only happens when you practice a lot and you're at the charts and you're consistently back testing, forward testing, studying. It all starts compounding. So because trading is a skill, you must treat it as such. Now, just like riding a bike, in the beginning, you probably fell on your ass. But then eventually, you got so good at it that people, not me, I could never do this, but they could ride a bike without holding the handlebars. And that's just next level, because I don't have the balance to do that. But I know if I just kept practicing and kept falling on my ass, I would eventually be able to ride the bike without holding the handlebars. So in the beginning, you really want to focus on the mindset part and focusing more on the process rather than the outcome. I say this because if you look at basketball players, for example, basketball players, they don't look at the scoreboard, or I don't know what it's called, but they don't look at the score. They're focused on the process of making the right passes. They're focused on scoring the right shots that they need to. And in that process is how they end up winning the game. The basketball player doesn't just stand there in the middle of the court looking at the score wondering if it's just going to change and if their team is going to win. That doesn't happen. They end up winning because of the process that takes them there. The same applies to trading. When you focus on the process of trading, what I mean by process in this case is studying every piece of material you can get your hands on, back testing, forward testing, and really just diving deep into the charts, into the market, understanding why price did something, why price didn't do something, and all those little intricacies of the market. So when it comes down to processes, it really is more based on the habits that you have. For example, me, I have a habit of doing an end of day markup after each New York session of the day. So over here, the New York session for me ends at 11. I know it lasts like up to 4 p.m., but I have other things to do, and that's another thing, right? You must look at trading. What do you want from it? For me, it's freedom, and I'm not going to be on the charts from 7 in the morning to 4 p.m. I'm going to be on the charts from 7 in the morning to 11 in the morning, because that is my session, and that is where my strategy is the most effective. And that's me. That's personally for me, that's what I've seen. So when you're focusing on the habits, like for example, that end of the day markup habit that I have, eventually that starts to add up, and it starts to add up, and it compounds over time. And that's only just one of the habits that I have that literally has helped me so much get to where I am right now. When you log data, when you see your entry models play out time after time, you start seeing that, and those things add up. It becomes a habit of doing this process after this happens, doing this after this happens, doing the end of the day markup at the end of the session, back testing every Saturday for 2 hours, for example, and really doing what you say you're going to do, not just putting it on your calendar and then something happens and you don't end up doing it. That is not consistency. So that's on the mindset part of things. Now, the second phase is to develop a strategy. When you have the right mindset, then developing a strategy becomes a bit easier. When I say develop a strategy, there are many ways to trade Forex. If you search on YouTube right now how to trade Forex, I can guarantee you will probably end up finding more than 5 different ways to do so. The important thing is that you understand the basics of what you see on the charts, of what the candle means, the price, the open, the close, understand basic retail strategies, EMAs, trendline strategies, price action strategies, Elliott waves, what else is there? Stochastic, MACD. Just by this, you can tell that I've looked into all of this before. I've been through that path. But it was necessary to understand different ways of looking at the market, different ways of how price moves throughout the market. And just a quick side note, signals is not a good strategy. There's such a thing called signal groups. I've been in them. Personally, it hasn't worked out for me. And if people guarantee you, for example, they hook you in with, learn while you earn. So they send you the signals and then you guys start copying their trades. But to be honest, it isn't worth it, because you're basically relying on the analysis and strategies of other people. And if for some reason that other group, that community, the signal groups goes out of business, they stop posting, and for some reason you end up with a 100K account, then what in the world are you going to do now? You can't rely on yourself, because this whole time you've been relying on a group, so basically you're done. So going back to the strategies, honestly, all of them work. I've seen people be very successful with Elliott wave strategies. I've seen others use simple trend line strategies. And it all works. It's just about choosing one, being consistent with it, and actually evaluating it over time if it works for you and the way you trade on the charts. So once you have a strategy that you want to implement, once you have it identified, what you want to do now is create a trading plan around that strategy. And a trading plan is just basically a set of rules and conditions that you have for yourself when entering a trade or when looking at the markets. So in that trading plan, you need to include things such as risk management. How much percentage of your capital are you willing to risk to find out if your trade is going to work or not, if your trade idea will end up working out or not? What entry models are you looking for? When you have those entry models in your plan, so you can know specifically what is it that you are looking for to enter a trade, as well as other things like your exit strategy. When are you looking to get out of the trade, and more things like that. This is my current trading plan that I have right here. It's very simple. You can see right here is version 1. I'm looking to change it up, and honestly I looked at this a lot in the beginning. I created this like I don't know, like 4 months ago, and eventually you just memorize it so much that you know exactly what you're looking for. But like I said, as trading is like any other skill, so that only comes with time. So in the beginning I just look at this and I say, okay, are we mitigating a higher time frame supply or demand? Yes, we are. Check. It has liquidity form right before or after the mitigation. Check. And like that and so on. So it's more of a set of guidelines that you have to follow your plan consistent. So the final part, step 3, phase 3, is to test the strategy and course correct. So up to this point, you have a strategy, you have the right mindset, and now what you need to do is test the strategy and see if it's working out for you. And the way you do this is by following your plan exactly as you have marked it out. You can do this through paper trading with a demo account, or you could even use live funds with very tiny amounts of money, like for example $100. The key here, the very important thing here, is that you follow your plan exactly as you have it there, because what we're doing in this phase is testing if your plan, your strategy actually works. And the only way to know if it works is if you follow it. If for some reason you have on your plan, I don't know, when price reaches 3 touches on a trend line, for example, and you entered on the 4th touch, I don't know, that's not in your plan. But when you do that, you're deviating from your plan and from your rules, and what that does is it messes up with the data, because you're evaluating the strategy based on a series of trades. That is data that you've been collecting, and that data is only valuable and it only works if you haven't changed anything. If you literally followed the plan and you applied that plan, you executed that plan on a series of trades, and then you can look, for example, at the end of the month to see if that worked out or if it didn't work out, if you deviated or if you didn't deviate from your plan. Now, one thing to keep in mind is that you will lose trades. It's totally normal. Back then I used to think losing sucked, but for me, every time I get a losing trade, it just means I'm one step closer to a winning trade. Why? Because I have a plan that tells me that on average, out of 10 trades, I get two trades that are correct, that are valid, because all the trades are valid. They're valid because they're part of the plan. What that means is I followed my plan and that trade ended up in a win. So for example, in this case, with a strike rate of 20%, that means that out of 10 trades, you get 2 that are correct and the other 8 aren't on average. So as long as those 10 trades that you took are exactly what you wrote down on your plan, in this case on my plan, those 10 trades are valid, even if you lost those 8. But it doesn't matter, because those 2 trades that you got as winners, those end up breaking even or even running up your account up in profit. So you have to make sure that you understand that losing is a part of the process. And that sounds so cliche, but it's just so true. It's because literally, unless you have this magic strategy where 100% of your trades are winners, then losing will suck for you. But because there is no strategy that is 100% accurate, what that means is losing is a probabilistic nature of that strategy. So in this case, a strategy that has a 20% strike rate, those losing trades are just part of the probabilistic scenarios. So when you're testing your strategy and you're refining your strategy, keep in mind that you cannot evaluate the strategy based on one trade. That doesn't make any sense. First of all, that's like saying, damn, I did this trade, I followed the plan, but I lost this trade. This thing doesn't work. That's just stupid. You can't know if it works or not unless you have a series of trades where you evaluated the data and you said, okay, I did 50 trades, and out of those 50 trades, I went negative. Then you can say with certainty that effectively there's something wrong with the plan, or that means that you didn't follow your plan to the T. So you only know if your plan, if your strategy works, when you have a decent sample size. A good size is about 20 trades, 20 to 30 I'd say. With 20 to 30 trades of data, and at the end of those 20 to 30 trades, see if your trading plan was profitable or if it wasn't profitable, and based on what time frame. I like to look at monthly time frames. Other people like to look at quarterly. Finally, when evaluating your strategy, you have to ask yourself, okay, at the end of the month, I did 25 trades and I was profitable or I wasn't profitable. And based on that, did I follow my plan? Yes. Okay, let's try again another month. Second month profitable. Then you have the certainty that you found something that can actually work for you. However, if on that first month you see that for some reason you went negative, then you have to ask yourself, did I follow my plan? Did I deviate from my plan? If you did deviate from your plan, then that's just a sign that you have to work on your patience and your psychology, because that is actually a very important factor in trading, especially when it comes to us as humans, because let's face it, we're just very emotional. There's something called revenge trading. I used to do that all the time, where I would get a losing trade and I'd say, I know this is gonna work. I know this next one is gonna work. So I just trade based on that mindset, on that frame, and I would instantly take another loss. And then I would mess up all my data, because that way of thinking, the way I took that trade, it has nothing to do with my trading plan. So that loss becomes part of a data set, and it skews all the data. It just messes it all up. So just to recap, number one, have a clear why and a vision. Know why you're going into trading. Understand what are your expectations. Make sure they are well aligned with what you expect to receive. Make sure they have nothing to do with getting rich quick, because I can guarantee you that does not work here. Number two, develop a strategy. Develop a strategy, whether it's EMAs, price action, stochastic, RSI, MACD, Elliott waves, whatever you want. As long as you develop it, you understand it, you learn it, and then you decide to implement it and test it out. And number three, test out the strategy and refine it along the way. So you basically become a scientist at the end of the day, because you are looking at strategies based on data sets, and you say, okay, I implemented this trading plan with this strategy and it was profitable this month, but this month it wasn't profitable. That could be a sign that I deviated from my plan in some of those trades. So next step, work on my psychology. Or I followed my plan for 2 months straight and it wasn't profitable. Then I have to decide, okay, do I change my strategy or am I doing something wrong? See, it's when you start asking yourself these questions that you start to truly discover the way of thinking of a scientist, and also of a real consistently profitable trader. Now, like I said in the beginning of this video, trading is not easy. Trading is not easy, and life will get in the way. Obstacles will arise, calamities will happen, and that's just part of life. That's just aside from trading by itself is already hard. But if you have a clear why and a specific vision, then that should be enough to keep pushing you through all those obstacles that come through trading and that come through the eventualities of life. So stick to your vision, keep going, and I can guarantee you that you will get there. At the end of the day, consistency will eventually get you results. I personally am a testament to that, because I mentioned before that I've been trading for like 4 years approximately, and if I had just quit on the first year, then I wouldn't be here making this video. No, there were times where, because of my vision and my why, I felt like giving up, but because of my vision and my why, I kept going. I tried another strategy, didn't work. I kept going. I tried another strategy, didn't work. I tried signals groups, it didn't work. But I knew that I wanted to become a trader. I knew that that was the identity that I wanted to become, to transform into that. And so because of that why, I just kept doing and doing and doing and doing until now, only 4 or 5 years after, is where I'm just starting to see some level of consistency, some level of profitability at the end of the month. So that's it for today, guys. Please make sure to subscribe to my channel to see more videos like this. Comment, share with your friends. Thank you so much for watching, and see you guys later. Peace.